Well, it's become somewhat of a full-time job keeping up developments in tariff land, as well as what's happening in Russia and Ukraine, other geopolitical issues, economic data, and earnings, not just in Europe, but in the US as well. But in times like this, it's really price that all that matters, and the aggregation of flows and human behaviours coming through in market pricing. And right now, what we're seeing is a huge amount of chop coming through in US equities. Europe and HK equities are going the opposite way, and we're seeing huge momentum, and the markets are flying with the power of Zeus at the moment. We're seeing a bit of chop coming through in the US dollar, maybe not so much against the Japanese yen, but certainly in the other GPM pairs coming through. Now, we're seeing gold pushing into all-time highs, but we are seeing a bit of consolidation playing through, and we'll assess where the path of least resistance could be going forward. Now, there's a lot going on, and we discuss all those factors in today's trade-off. Hi there, my name is Chris Weston, Head of Research here at Pepperstone, and as always, Blake Morrow will be joining us from Forex Analytics. Now, Blake, I'm dressed today in my casual nightclub wear. You are looking a bit more refined, the gentleman that is Mr. Morrow. A lot going on in the world right now. I just gave you a little bit of a synopsis there. A lot of cross currents, tariffs, Ukraine, the whole works. For me, there's a lot of noise. And for me, it's just about following the tape, following the price action, letting the aggregation of flows. And how are you sort of talking to your guys, your community, about trying to block out the noise and just listen to what the market's saying?
Well, one of the things, and by the way, I love the good cop, bad cop look, or the nightclub nightclub look. It's great. But jokes aside, I'm really, I can't help but dismiss the weakness of the dollar, and we will talk about that. Following today's
weakness,
data.
or not as strong as you anticipated?
Not as strong as I anticipated. You would think
that
the dollar would have come out of its shoes today, and it didn't. And so those are things that you talk about listening to the tape. I mean, right now we are in a consolidation. We've been in a consolidation for the last few days. Since the market basically came online over the weekend. You're right. We're, antennas up, waiting for the headlines, the tariff risks, the reciprocal tariffs that are going to go into effect tomorrow morning. All that stuff is playing into the market, but they're all known knowns now. And the market's just poised. And I think this might be the calm before the storm, Chris.
Ooh, calm before the storm. I like the sound of that. But yeah, let's go into topical thunder. I want to hear your thesis here. All right, before we do, I want to see what's working right now because, you talk about this consolidation of the dollar. I mean, go and have a look at the daily chart of Aussie dollar. It's in a really tight range at the moment as we go into the RBA meeting next week. Euro dollar sort of 102, 105. We're sort of pushing top end of the range now. I think that Ukraine, Russia headline's probably helping. There's a number of factors as well. You've got copper moving up a bit. Obviously, gold's been a big momentum trade now. It just seems a bit toppy in dollar terms. But I think, if you look at US equity markets, they had a nice move up into near all-time highs, and now they're just seeing a bit of chop up and down. They absorb the CPI number pretty well last night in terms of growth markets, so growth stocks. But I think for me, if I look what's working in equity land, and I've got a couple of charts talking about in a minute, it's Hong Kong, H shares and the Hang Seng, because Alibaba has absolutely gone for it. BYD is also giving some points at the moment, but Alibaba has just become the new AI darling, and I think maybe people questioning US exceptionalism to an extent. What's the kicker? I know we've got NVIDIA's earnings coming up on the 26th, but where the markets are chopping around, and you've got Hong Kong and the H shares just loving it at the moment, given what we've seen in Alibaba. And then you've got European equity markets. You pick them, DAX, pick IBEX. They're all moving at the moment. I think it feels like with the exceptionalism trade in the US, it's not over by any means at all. Of course, it's not, but it's lacking that momentum at the moment. People are flipping those positions, and they have been flipping those positions into European equities. Better earnings there, really good earnings, and coming through in Europe. Perhaps a feeling that we're seeing trough growth, but they're the markets which I'm looking at the moment. So gold has been a big momentum. It's just peaking down. For me, it continues to be European equity markets and Hong Kong equity markets here. What are you seeing?
Well, I think you've laid it all out. I mean, obviously there are things that are moving, and I believe, and correct us down below if I remember incorrectly. Last week we talked about the outperformance of U.S. equities, and I think we are going to see other markets outperform U.S. equities moving forward. And we're looking for clues, and that's one of the things that we're going to be talking about here a little bit later today in the setups, is looking for clues on what's showing some signs of, maybe weakness, if you will. But overall, I think you pointed it all out, Chris. And I have to say, with Asia, with some of these Asian markets really moving, and the Aussie dollar really finding some firmness down here, I'm getting really close to getting long some Aussie dollars above and beyond everything else. I know
against
you
what?
mentioned
what would you do against the dollar?
What's that?
What you go on.
Yeah, I think so. I think I would. I think I'd be buying the Aussie against the dollar, and it's a trade that I think is just on the cusp of breaking out to the upside. Now, you might have seen copper sitting at a 618 retracement. Some people would say, oh, it's big resistance, might be a double top, but frankly, it looks like it's going to break out.
So I want to pull you up on this. I
think the Aussie story takes hold.
Yeah, so I like it, but the thing I want to question before we go into CPI on that is that, look, I think Aussie works well when China and copper's working well. If the factor is a growth factor, and maybe that works as we go into the MPC meeting in March, and people say that we can get more hopefully we can get more definitive idea about their fiscal stimulus, and maybe that boosts the idea about future growth. But if it's because predominantly Alibaba is driving equities higher because they've been working with Apple and factors, the stock's up 47%. Is that really an Aussie dollar positive? I'm not sure. Copper, on the other hand, has had a nice rally. It's hit the double top now. I don't think that's necessarily a reflection of China growth. I think that's because people have seen a similar situation of gold, and they're saying, well, we're worried that Trump's going to change Section 232 on the executive orders and put a tariff on copper in the future, and then people are front running, moving their copper into the CME, into COMEX, and that's pushing up the CME price. So it's probably more a flow based effect. So would that change your Aussie view, or is it does it keep it intact?
I like you. I'm just following the tape and seeing what is performing and underperforming, and that brings us actually, Chris, to the next topic. I want to just go ahead and move into.
Oh, let us know when you pull the trigger on the Aussie dollar trade, and
of course I will. Yeah. That's going to be a play of the day coming up next week.
Yeah, good, cool,
maybe. But let's talk about CPI, because CPI came out. I mean, on every metric, it was hotter than expected, and we saw an initial response with the dollar. I mean, you saw the euro, drop below 103.50, but it popped right back up above 104, and is perched just shy of 104 by the end of the day. Now, I know we can talk Ukraine, we can talk Russia, and other things that might be incorporated in the euro, but again, look at the cable. Look at the Aussie dollar. The Aussie dollar is just a skip, jump, and a hop away from 63 cents. The dollar Canadian is sitting on a ledge right now at the 143 level. I expected a lot more out of the dollar today. And if you look at the dollar index, it's forming a bear flag pattern, and we closed at the flag support today. What is the reason, in your view, Chris, that the dollar is just not performing well? Again, is it the known knowns? Like we know, like, oh, reciprocal tariffs. Great. We know that. We know that Trump is going to, impose tariffs on, this, that, and the other thing. Great. We know that. What is it to you that's keeping the dollar so offered at this point?
Well, I think it's probably people have been talking about tariffs for months. If Trump comes in, we're going to see this tariff. So it's going to be the world's, it's the biggest thing. And what's actually transpired so far is a strong commitment by Trump to be fairly commercial and negotiate and feel a bit more of an open-minded situation. So I think the market had gone into tariffs thinking, when we start getting the tariffs that are used to close structural deficits, they're going to be hugely dollar positive. Once we go to the America First program in April, when he goes to do revenue raising tariffs, then they're going to be really very dollar supportive. But what we've actually seen so far is nowhere near that. In fact, when we get the reciprocal tariffs, which we'll probably hear more about, today, given he was supposed to come through before his visit with Modi, this idea that market is now seeing is that, if Europe have got tariffs of 10% on US imports of cars, and the US have got 2.5%, well, it actually might not be that the US ends up putting theirs up to 10% to be reciprocal. Maybe it's actually Europe who lowers their rates. And that could actually be good for global trade. So I think there's an element of we don't, until we actually know the context, and we're priced in quite a bad scenario. Maybe it's just not worth buying dollars right now. I think the other factor as well, you've got European equities have been so significantly outperforming that I think a lot of real money accounts have been having to buy euros to recalibrate their international portfolios and international exposure. I think that's been a big factor. Talk about the better growth. Citigroup's economic European surprise index has been rising. US is falling. So there's not one factor I think that's come through, but I certainly think people are looking to maybe buy dollars. But I think right now with the tariff news, it's like, well, show us something that we didn't already know, and then that's actually worse than we're priced in, and maybe we'll buy more dollars. But at the moment, we're not seeing that, right?
Well, we're not, and I'm excited to talk a little bit about the next topic because I was there's an old economist, Robin Brooks. He's I think he's an old Goldman economist, and he talked a lot about tariffs. But anyway, let's move on. I know we got it.
But I think you're right. I mean, going back to the CPI, sorry. I mean, I think that we did see a big number, and it was a big number. But it's not core PCE, which the Fed set policy to. So we're going to take those.
And Powell said that today.
Yeah.
He said that today.
But if you look at what the economists have said, it's like, we're going to take parts of that CPI basket that go into the PCE calculation, and we're going to get more tonight in the PPI numbers. But they're currently modelling the upcoming PCE print, which comes out right at the end of the month, 28th February. At 0.35 of 1%, which gives you a year-on-year rate of 2.6%. So it's not the troubling picture that we're seeing from CPI. Now, economists are saying that. The market's seen it a slightly different situation, though. We've seen, as you say, like the rates market, the dollar hasn't really done too much other than, again, rally against the yen. But we've seen a 9-10 basis point back up in 10-year treasuries. Real rates have moved up, and the market's now pricing the next rate cut from the Fed not until December. So that's we're on a big extended pause. So I think you make a great point. I want to go on to the tariff developments, but I would have, if you had told me that number at the beginning of the day before it was released, I would have said, you know what, the dollar's a screamer. It rallied hard against the yen, but everything else. Anyway, let's go to tariff developments because. As we just sort of touched on there, it is a tough one. But for me, tariffs are. We've got to sort of think about them in three buckets here, Blake. You've got tariffs, which is using to cause a specific effect. Going after like we saw with Colombia, like we saw with the fentanyl issues with Mexico and the US and Canada, and then you've got tariffs which are designed to address structural deficits, like we're talking about reciprocal. So people have been saying, what is the trade deficit the US has with China, with Mexico, all these places, and he'll use tariffs to try and recalibrate that and bring that back in line. Then you've got the America First one, which is going to be using tariffs further down the line, in probably from April the 1st, which is going to be used to bring in revenue so that he can address tax cuts further down the line. Now, we're not hearing much of that. But, like for me, there's a lot of noise. We're talking about for months beforehand, but it's just noise to me at the moment, and it's not causing any anxiety yet. So what are you talking to people about how this and how it affects your trading?
Well, again, I think it's the known knowns right now, and but when you're talking about like reciprocal tariffs, there are a lot of countries that are more emerging market countries, whether you're talking about Korea, Mexico, India, South Africa, that really could get hit hard. But one of the currencies that I trade probably most out of the ones that I just mentioned is the Mexican peso. Yet the dollar Mexican peso isn't going anywhere, and it's just been stuck. And we start getting below 20, and things get a little dangerous for Mexico, or for the dollar Mex, it would fall probably pretty aggressively. But I've got to be there's got to be something, Chris, that is not unknown, that is lurking out there in the markets, whether it's the Trump's bark is way worse than his bite. Maybe the market is just reflecting that right now. Or maybe it's just because you would think it'd be priced. The market would be pricing in everything that we've been talking about. And for the most part, it seems like it isn't. So maybe the market's just nonchalant about, tariffs moving forward. They'd like to see more action versus less negotiation.
I guess the other factor is when you get into a tit for tat. We're not really. We've said Europe's an interesting one there because they're getting most of their gas now, the LNG from the US. They used to get it from Russia, and maybe that changes if we were to see a prolonged ceasefire and maybe the war finish. But Europe would stand to leave. We've heard the European Commissioner saying that we will give it back. Now, if the US comes in with tariffs and US go back, maybe that could deteriorate. And China's obviously the other one. Their tariffs have kicked in. Their 10-15% tariffs have kicked in. Will we see new tariffs coming through more aggressively? And then that tit for tat. That's where I think you'd probably say risk-off picture playing through if it got aggressive. But we're not. It's all been very orderly, and everyone's shaking hands and backpacking. It all looks quite nice at the moment.
Yeah, it does. It does. Anyway, well, let's go to our last topic, Chris. And I actually want to talk about gold. Gold. And I think we had this discussion last week. And this is where I'm going to ask for you guys at home, you guys and gals that are listening in. I know there's a lot of women listening in because they want to see Chris. I mean, let's face it, Chris. Yeah, it's happening. So get down below in the comment section. And I want to run like an informal survey. Do you guys see gold going to 3,500 first or 2,500 first? Now, as I mentioned last week, Chris, I can't argue a bearish case in gold other than it's maybe overloved and maybe it's a little overbought.
That's right.
But we spent the last couple of days working off some overbought signals, and as you can see in price action, dips below 2,900 were bought aggressively today. So, post CPI was hot. Gold dropped below 29 or 28.75, and it was scooped up and rallied right back to highs of the day. So, what do you think, Chris? I can't argue a bearish gold case right now. And I get scared when I feel that way. And I'm sure people down below in the comments are going to be letting us know if they feel it's 3,500 or 2,500 we see first. And I'm guessing we're going to get more 3,500s out there. What are your thoughts on gold and its trajectory, and what's going to stop this train?
Well, I mean, we talk about every week is that gold's doing what it wants to do, and then you have to go and put a reason behind it. But for me, it's the physical market, which I think is really interesting here, because a lot of people have moved their gold out, to COMEX to avoid, to front running the tariff potential, precious metal tax, and we've seen, holdings into COMEX gold, up over 100% since December. So one question is, what happens if all that gold's gone now? If we start seeing those holdings come down a bit in the COMEX vaults, and that's pushed the CME price up, and I think that's supported the spot price. So one, that would be a risk is if we were to see COMEX vaults sort of that trajectory peaking out. The other one as well is that bullion banks in the UK have effectively run out of gold to lend out and to deliver to their customers. So they obviously everyone's going to the Bank of England to try and get the gold, but wait times and the bottlenecks there have seen waiting sort of 6 to 8 weeks now. So, if we were to see a situation where those bottlenecks ease themselves and that gold, the physical gold in London was to become less scarce, and, we're seeing people looking to borrow gold in the physical market at very, very expensive rates now. The lease rates overnight are sort of 12-13%. Maybe if they typically when you see that dynamic, there's arbitrage situations. So maybe, new gold comes in and see some of these statistics bottlenecks ease up a little bit, and we were to see those lease rates come down. Maybe that pulls the gold price down. Maybe people, but I think I'm not sure. I'm not an expert in that field, but gold's here for a reason. I think I just look at the tape, how strong it's been, and I say I wouldn't be chasing it here. Like you say, every man, woman, and dog's got a position in it, and there's the flows to COMEX have been so huge that one suspects there's not a huge amount left to go over there. But I wouldn't be chasing it here. But I think taking a sort of more swing approach, wait for a bit of a pullback, let some of the heat come out, market kicks high and you jump in, and that's your new leg up, I think is the trade with gold for me.
All right. Well, Chris, I don't know what's going to stop it, but you guys down below, let us know.
I don't want to skew the chart. I guarantee everyone's going to be saying 3,500, but it'd be interesting to hear some of the contrarian reasons. And Blake doesn't know a reason why it goes down there, but maybe you guys do. So yeah, great question. Thanks for bringing that up, Blake. Anyway, let's go to the technicals. Let's go to that's the setup. So we've been overrunning on the fundamentals. My producer I can see him out the back. His hands against the wall. He's huffing. He's sweating. He's like, I'll keep to time. Boy, likes to tell us a lot to say. Anyway, yeah, I talked about these momentum markets, and we've got the China H here. And it's a very similar sort of market to the HK50. Some of these are Hong Kong stocks. Some of these are China entities that are listed on the Hong Kong the H shares market effectively. But yeah, look, I mean, you've got that downtrend that broke recently, and you can see that the market's been making a load of higher highs and higher lows, and you can see it just holding that short-term EMA. I've just used an 8-day there just to give it a little bit more breathing room, but you can see that EMA is just moving up very, very closely. Other than that, I'd be using that if it was long. Just to use that, just stay in the trade, stay unemotional, stay long. Price closes below 5 or 8 day exponential moving average. Maybe take some off the table. Maybe that momentum, that impulse has gone down. But right now, this is being driven by BYD. They're doing everything right in the EV space. They're cutting Tesla's lunch. Just obviously. The developments, autonomous overtaking, and being able to park your car through their God's Eye app effectively from your phone is amazing. But they're doing well, and obviously the Alibaba story is really the story, and with HK Tech and China Tech really flying. So pullbacks are a buying opportunity. I stay long until this closes below those short-term moving averages. Stay unemotional. It's obviously kicked, but yeah, this is getting a lot of attention right now. I thought I'd bring it up.
A lot of momentum there, Chris. A lot of momentum. Well, speaking of, this is a setup. That's a setup. That's what this is about. And you might have remembered we talked about the Euro Swiss a couple of weeks back when we were probing this resistance. And I'll tell you, Chris, by the way, I am using some shorter time frame charts, as you guys can see.
Sexy.
But we're getting right up against key resistance at 95.15. And with the Russia-Ukraine situation, maybe let's all hope. Maybe behind us, maybe there's going to be some desire to sell Swiss francs, buy euros, and if we do get a breakout, it could end up being a pretty large move. This is one of those pairs that have been, developed like a big double bottom, and we could get a range extension. It could take us, back towards 97 cents, maybe even parity. But this is one currency pair that I have not had a position in. I was long a couple of weeks back. I think I got out for break even. I didn't trade it super well, but now that it's back up against resistance, this is definitely on my radar, and I think it should be on your radar too as a setup. So there you go, Chris.
Yeah, good one. Well, let's flip it over to the Germany 40 because I want to stay in the momentum vibe because I talked about China H or another one's the HK50 Hang Seng. But yeah, this is the other one which we've been talking about now. Obviously, this is just absolutely ripping. I think there's a number of factors behind this. And again, I want to stay long until we get the close below these short-term moving averages. Very, very simple stuff, but it keeps you unemotional, keeps you in the trade when a lot of people have been taking profits and they would have been taking them early. How high this goes, I have no idea. Obviously, I don't. But the fact that when you use these more systematic exit strategies, you can stay in the trade and try and collect the juice. A lot of the more emotional people will be taking profits. So, the DAX and the Germany 40 was the best performing risk-adjusted market in January. Gold was pretty close, but that was the best one. And that momentum has spilt over. What's happened there is you've got a lot of the earnings have been better. People are looking at growth. Looks like it may trough. We've got an election coming up in Germany at the end of the month, and people are saying that on current polls, we may see a sort of a pro-growth budget coming out later, and maybe that's that sort of solidifying that growth. We got the exceptionalism trade in the US, not necessarily called into question, but it's certainly taking some momentum, and people are flipping and rotating into what's working, which is Europe. And there's a whole host of other reasons playing through, but certainly this is the market. Where does it go, Chris? No idea. Obviously, this is the whole point of things like momentum and trend following strategies. Is you don't try and guess, you just stay in the market as long as you can until the market spits you out. So this is an absolute beauty. We do have a little bit of divergence on the RSIs, but when the peak of the RSI is at such high levels, it's difficult to print a new high on that. So one to watch. I'll stay long at the moment. Again, just taking some off the table when we close through some of those sort of systematic rules.
Big momentum plays that you've brought here today, Chris. Well, I'm going to bring you one that's opposite of that. As I mentioned earlier in the show, I kind of look for clues as a trader on things that are really not participating. And this is Microsoft. And we call it, actually in 97, when I first stepped onto block trading's trade floor, everybody used to call it Mr. Softy. But today, it really is Mr. Softy. I mean, Microsoft is really underperforming, and you can see that we're challenging. And today's low was, let me make sure I get the number right, 104.37, 404.37. Now, today's low marked a nice horizontal support. It's triangle support. And I think that's going to be a really important level to watch, because if it breaks and we start breaking back below 400, it might bring in some selling into the Mag 7. Now, as one of the statistics that I've read a couple of different times, that there's three things that are most widely held in the markets right now: dollar long positioning, Mag 7 long positioning, and short the bond market or notes. And so when you look at some of the generals of the Mag 7, some of the generals of the market like Microsoft, if it really starts to break down, that might clue you in on what other markets may do soon. So keep an eye on Mr. Softy. This and it could be a great buy here today if you want to just be long and you know where your risk is. I mean, that's another way you could play the setup.
Well, there's a cohort of investors that you and I are not, and that's value orientated. And I can imagine the value dudes out there saying, this is a brilliant business, which it absolutely is. And we're just looking to bit more of a pull to buy it at the right price. For me, I'll wait till the value guys come in and support price, and price actually responds positively, and I'll ride the coattails and trade that. But for me, everyone's talking about Microsoft in the equity land and saying how frustrating it is, and it's just not doing what they want. So I think a lot of people are giving up on that and using the capital for other things. So I definitely think that's a great chart, and thanks for bringing it to attention. So let's go to play of the day. All right, I'm gonna stay in the gold vibe now. I'm gonna spin it up, flip it around, go a bit Dennis Gartman on you. Have you ever that guy?
Oh yeah. I'm buying gold in yen terms.
I'm gonna buy corn in British pound terms, kind of thing. Yeah. Anyway, I'm going for a bit of cheeky gold. Why? Because it's working. A lot of things that are working, going up. I know there's going to be people out there who are looking at this chart and going, I want to sell this because it is at all-time highs. It's going up. People love, in the retail land, doing the opposite of what the flows are doing. And for me, this is one that we stay long. And pullbacks, as long as it's sort of staying above the previous high, I think this looks good. The pullbacks will be shallow. Doing it in yen terms, because obviously if you're buying an asset in an alternative currency than the dollar, what you're doing is you want to do it in the perceived weakest currency. So obviously if I'm sitting there going, well, if the yen's got some really good upside, then you wouldn't be doing this trade at all. You'd be doing it in the currency that you think could be the weak. But right now, what we saw yesterday is a one-day affair. Is that the yen has emerged as a bit of a weak link. Now, whether that can kick and we can see broad US yen sell-off is obviously another factor. But if I like gold right now, what we're seeing is gold in yen terms actually the best performing place to be. So like gold, don't like the yen, get double bubble for your trouble. And sorry, it's a family show. But there you go. I like this trade, and it's working. It's doing everything I want. I'm staying long this one. I think this continues to kick.
Well, Chris, I'm not going to short the gold and yen terms Dennis Gartman trade that you got going on. But that doesn't mean I don't like the yen. So
but you can trade gold in all these different currencies on Pepperstone, in pound.
Yes.
Yeah, euros. Then it's all set up for you, so you don't have to actually sit there and do it all. It's just a straight pair that you can do it in.
So what Chris is telling you is you also could be Dennis Gartman as well. And if you don't remember him, well, maybe you should watch a couple YouTube videos on Dennis Gartman sometime. Yeah. Anyway, I want to actually short the dollar yen. I've been waiting for this. We saw a really big bounce range extension, took us all the way up to the 50% retracement of the entire leg lower. 78% retracement of the last leg lower, the last leg that started in the beginning of February. But basically, at 50% of the 2025 move, and we're at channel resistance. So we hit this confluence. I actually already started a short earlier today. So I am talking my book in this situation, Chris, because I know where my risk is. My risk is above 155.20. That's where my stop is, just so everybody's clear. Like, I'm very, very well aware of it. But I do think the yen is one of those currencies that I think it moved down yesterday because Ueda didn't give the market what the market may have wanted to hear. But was that really 230 pips worth of a move worth that? And I think it's a little mispriced here. So play of the day, intraday, I'm shorting the dollar yen at current levels, and I'm looking for a move back down towards 153 or so.
Well, we've got pretty much an opposing trade here, really.
we do, but maybe gold goes to 3,100 for you tomorrow.
Well, you're doing US dollar terms there, so yeah, I think it's an interesting one. The other thing on the chart I was looking at the moment, and I'm not much of an Ichimoku cloud guy, to be fair. I mean, I love moving averages and bits and pieces, but as sort of an exit tool. But yeah, a lot of people in Asia and specifically Japan do use the iCloud as a tool, and you do see it respecting those levels. And right now, you've got dollar yen pushing up into the baseline, just below the top of the cloud. So, you have seen throughout this year rallies being sold into the baseline. And so maybe that does give you your initial short. So that's another one, because a lot of Japanese traders, Mrs. Watanabe and et cetera, do look at it very, very closely. And so we're right at that level now where you've got that short baseline kicking in above.
That, Chris, I actually meant to say that while you were talking about
I know you did, mate, and that's why I got into your head and pulled out the thoughts.
No, you did. But keep your daily chart on, keep an Ichimoku cloud out there. And Chris is exactly right. A lot of Asians follow that. Our trader at trading at Forex Analytics, he'd been on a bank desk for 40 years, been in trading yen in Japan on a yen desk, and he looks at it religiously, and I think you should too. I think Chris makes a great point, and you're right. We're right into the base of the cloud. We're actually in the cloud right now. Yeah. I think we popped above it when we popped above 153.70 or something yesterday. So anyway. Yeah.
Cool.
Great stuff, Chris.
It's been a long show. Sorry, Mr. Producer. He hates you right now, Blake, and me. But I love you, Blake. And anyway,
but I'm the good guy. You're the bad guy.
You are, mate. Anyway, thank you very much. It's been obviously a lot to talk about. There's a lot going on in markets. We'd love to hear your thoughts. Let us know how you're seeing the noise, what trades you like, whether you'd be fading these momentum views, whether you like the Blake trades and views that Blake's been sticking out there. And we'd love to hear how you're trading the markets, the trades you like, and the strategies you're looking at. So put them down below, click the like button, and subscribe to the show. Tell your family and friends around it. Anyway, we'll see you back next week for more of The Trade-Off.